Welcome back, YouTube. So in today's video, I'm going to discuss Bitcoin's recent breakdown back down to the $19,000 level and what that means for some of the other the crypto market in general, and also what that means for Dogecoin's price action. But before I do, make sure you check out Moomoo in the description section so that you can get payment for order flow free trading. And also check out my Discord through my Patreon, where you can get access to all of my trades and the moves that I'm making on a week-to-week basis and our weekly Zoom calls. So let's get into this. Let's take a look here at Bitcoin. So if you haven't checked out my community section or my Twitter, I basically posted when Bitcoin hit around like the $19,000 mark. As a matter of fact, we're actually barely above 20,000 as I record this video. And we are about a third of the way down to that next level of support, which would be our lowest point of this cycle, which is around the I'd say the high 18 mark, right? And we have some little flash crashes down below, but we got around 2 touches at this 18 mark, so that's where I'm going to call where we could expect another bounce if we get further breakdown. Now, typically when we see the market break down or Bitcoin start hitting these levels here, ultimately that starts to put panic in the market and saying, okay, well, Bitcoin's going down further. Does this mean that my coin can go down further as well? And the answer to that overall is yes, but not to the extreme levels that we may see Bitcoin. See, Bitcoin has a large number. It really just depends on what coins that you're particularly invested in, but Bitcoin has a very large amount of institutional money. So Bitcoin, we have the standard, 80-85% correction rate that we talk about, and the institutions does not always allow Bitcoin to fall at the rate of other coins. So typically fear can drive the other coins to correct, even almost to like their max pain level almost immediately when you see evidence of like a bear market and stuff like that. But institutions, people who are long and trying to get in on Bitcoin, stuff like that, you're going to see more of a fight. Bitcoin gradually descends down to those levels. And as a matter of fact, you can take a look here at the charts that I've mapped out previously. We typically hit a sideways period and then we drop 10K. And this is like where we are right now. This will technically be the third leg on this 10K descend after we hit like some, I don't even want to say support. We'll have like some sideways, we have a declining wedge, an inclining wedge, but ultimately we decline 10K. The first time we started this was, looks like back in May, March, like April, May. And then we had a declining wedge here. We dropped 10K. We had an inclining wedge here, and then we dropped 10K, and now we have another inclining wedge. And the question is whether or not we're going to drop 10K. Historically speaking, yeah, we can go down to around the 10K mark, and that would be actually completely normal for price action. What does this mean for other coins and stuff? Well, other coins have, I want to say that they've corrected as much as they can, but they're going to be mostly at the point where they'll still be affected by a breakdown of Bitcoin, but not to the extreme level. So if Bitcoin drops, another 10K or so, that doesn't necessarily translate across the board to other crypto. You can see a further breakdown. We'll take a look here at Doge in a moment, but you can see a further breakdown, but it doesn't necessarily mean that shock wave is going to have a corresponding effect of equal pain or retraction across the market. So Bitcoin in itself, we have the capability here, and we know Jerome Powell, he pretty much sent some shockwaves to the market on Friday, and some of the markets and stuff literally just like walked off of a cliff. And we've seen the panic and the sell-offs there saying that, oh, okay, well, despite the economy, I guess, semi-recovering, you can see like some evidence of gas prices and stuff like that coming down. Inflation went down for 1 month, at least year over year. We don't have a trend yet. We'll see the next CPI report, and people are like, "Oh, it's over. We bottomed to the moon." And Jerome Powell was like, pretty much, not so fast. We're still going to keep our foot on the gas here because, and I agree, because there's a long way between 8% and 2 or 3%. There's still a lot of room that you can get some reversals here and get back going the other way. So I do believe that he's correct in it, saying that okay, it's too early to celebrate and to say that things are out of the water. And also, I believe what also set another shockwave was they were asking about, okay, well, you laid forth this plan and you said that by the end of the year we're going to be at 0.25. Are you sticking to that? And they pretty much they gave no comment. They gave no comment even on the next interest rate hike, that for the next CPI report next month. They didn't say it was going to be a 0.50, and it didn't rule out that it was going to be another 0.75. So that there is like uncertainty in the market. We know that uncertainty is not a fan of the market. Uncertainty always goes toward the fear side of the spectrum. So we got that negative reaction here. So I'm not surprised that we're seeing this reflected in crypto as well. But we have to understand that institutions play a large role in Bitcoin's price. Yes, it's a great indicator for the market, but it plays a large role in crypto's price. So we're going to have to keep that in mind when we're evaluating other coins. So if we take a look here at Doge, we'll see we actually have a couple level of support here where we got 2 touches on each of these. So that's why I drew them out. So I'm not discriminating between Doge and Bitcoin. I only drew the support lines where we had 2 touches. I don't consider anything a trend unless we have a minimum of 2 touches. So that's why there's 3 lines on here compared to the 2 with Bitcoin. I could have drew another one at around 17 or so, but again, that was 1 touch. So I don't want any comments about me being prejudiced. Okay, so we're about a third of the way to the next level of support at around the 6.3 mark. So we broke through the 6.6. 6.3 will be the next one, and then of course our bottom line right here is the low of this year will be around like 5.2. Again, we have some flash crashes below that to around like the 4-cent mark, but we typically bounce back up almost immediately. Those were rejected, and we finished in around like 5.1 or so. So it's not but we don't have room to go down, at least based off of the current trends in the market. It's just that it's not as dramatic as you may see in other coins. So you may see coins dropping down thousands of dollars, and you may see a penny or 2 on coins like here because we've already corrected to max pain. So when you're at max pain, people who are long in the coin, people who may not even like the coin, they're like, oh, this is a great deal. I'm just going to get into the coin here and hold from here. I don't mind my average being this low. And if you don't believe me, you can take a look at the shorts here, like we talked about the other day, when they were increasing their short positions 40%, 50% on the day, and the coin only moved 0.2, 0.3 of a penny. This is what happens when you have that, where you're at the maximum level and you start pushing against that spring, you start to get pushed back. So it becomes very difficult to get the price of the coin lower outside of like some major macro event. So we're still well in position for these support lines here to hold up. So even now, even with the Bitcoin going back to around 19, you see that we never even dropped below 6 cents. So right now we're literally based off of the macros in the market, Jerome Powell, the market, Dow, and all that kind of stuff falling, and all the chaos that's going on in the market, and Friday being like a bloodbath. You see Doge only fluctuating tenths of a penny at a time. Bitcoin dropping to 19,000. You're seeing sell-offs and panics and articles and stuff like that. Doge is still, just chugging along. So, and this is, one of the benefits of having a more held retail coin versus institution. So most of the correction and stuff like that when happened earlier on, because retail is going to panic a lot sooner than institutions. So when people are laughing, saying, "Oh, look at the decline and stuff like of Dogecoin. Oh, it's dead, it's dead, it's dead." And now you see all their favorite cryptos catching up. So it's fine. Time will tell, and that's one of the beauties of being in the markets and looking at charts and stuff. You're able to get a long-term perspective and get an idea of what's going on overall, so you don't panic and end up not holding a position that could have made you money. So with that is the update for the price action on Dogecoin. If you found anything I had to say had value, like the video, share the video, subscribe to the channel. I appreciate all of you, and I will see you guys in the next video.